We're about an hour into the US trading session, and it's been a data-driven stock pickers kind of morning. I'm Grant Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The key new headline hitting the tape comes from the labor front. According to reporting from MarketWatch, worker pay and benefits rose again in the third quarter and are still running ahead of inflation. But that advantage is narrowing as the jobs market softens. That's a nuanced story for markets. On one hand, real income growth can support consumer spending and earnings. On the other, a clearly weakening jobs backdrop keeps recession worries simmering and may nudge the Fed toward a more cautious stance. That same labor report is doing double duty in traders' minds. It's being seen as a modest positive for workers and potentially for consumer-facing names, but also as a warning sign that the economic cycle is aging. So you've got this push and pull, income strength supporting demand, versus a deteriorating jobs trend that could eventually weigh on hiring, profits, and risk appetite if it continues. On the sector side, one pocket of strength that's back in focus is industrials. MarketWatch highlighted a Wolf Research note pointing out that industrial stocks have been red hot this year, but very much in a stock picker's market. That lines up with what we're seeing on the screen. Broad indexes grinding, while select industrial names tied to infrastructure, automation, and reshoring themes continue to attract attention. Professionals are treating that group less as a blanket trade and more as a place to be very selective. Within that broader industrial and energy transition story, GE Vernova is getting buzz after boosting its long-term outlook and talking about returning more cash to shareholders. The stock has pushed to record territory as it rides the electrification wave. Names like that remind this market that even in a choppy tape, clear, long-duration narratives around grid upgrades and clean power can still command a premium. In autos and AI, there's also a narrative developing beneath the surface. MarketWatch reporting notes that Tesla's stock carries an AI halo, and the question now is whether Rivian can grab some of that enthusiasm with its autonomy and AI day coming up Thursday. Traders are watching that as a potential catalyst in the EV space, less about near-term fundamentals and more about who can credibly sell a software and autonomy story to investors. Let's talk under-the-radar names, because those can quietly reshape the tape over a few sessions. Cracker Barrel is one to watch in the background. After pushback over a remodel and logo change, the company now faces what management calls unique and ongoing headwinds. That puts the focus on how legacy consumer brands navigate both real-world cost pressures and reputational hits in a slower growth environment. There are also a few broader personal finance-style stories floating around, like guidance on handling a big windfall and debates over when to claim Social Security, reminding investors that household balance sheets and retirement decisions are part of the macro backdrop. Stronger, real wages today can help. But if the labor market keeps deteriorating, those choices get tougher for many Americans, and that can feed back into spending and sentiment. From here into the next hour, I'll be watching how the market digests that wage and benefit data. Do bond yields or rate expectations shift as traders lean into the idea of a cooling but still inflation-conscious Fed? And on the equity side, I'll be watching whether industrial strength and electrification stories like GE Vernova keep leading, and if any early positioning starts to show up ahead of Rivian's AI event. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.